All right, shares of retail giant Target up slightly despite a downgrade from Wells Fargo. Analyst Edward Kelly writing that opportunities in consumer staples retail names look, quote, don't look particularly compelling to start the year. Here to discuss what lies ahead for retail is Mark Mathews, National Retail Federation VP of Research Development and Industry Analysis. Good to see you, Mark. So I know you can't get into particular companies, but what does a downgrade of Target when it comes to that broad picture in retail ahead say to you about what's coming, what's on the way?
Well, I think we're relatively bullish as we head into 2023. The consumer still remains in a relatively strong position. So I think what we need to remember is that, individual companies have individual issues, but when you look at the industry as a whole, the consumer is, they still have 1.5 trillion in excess savings that they can call on. So, as we look into 2023, we've seen strong growth, over the last 3 years. 7% in 2020, 14%, which was really unbelievable in 2021. And it looks like we're going to finish this year at over 7%. So, that's strong momentum going into 2023.
Mark, the 7% growth, though, is that just because of inflation, the fact that people are simply paying more for goods this year?
Yeah, I mean, it's a great question. And our numbers are they're not real numbers. So what we have to do is we have to back inflation out of there. But even when we back inflation out of there, there is still real growth in there. Not a big number. But, consumers are still spending on retail. What's interesting is, a lot of people have been talking about, a shift back to services as we return to normal. We've seen people return to normal, but we haven't seen a reduction in the share of wallet allocated to retail. So people are probably overspending a little bit and continuing to spend in the retail space.
One of the other interesting parts of that Target downgrade was the word shrinkage. And that's not from George Costanza for you Seinfeld fans out there. That is theft, retail theft. It's been a major issue at Target. How big an issue is it retail-wide? Do you have the numbers?
Yeah, well, it's $100 billion problem for our industry as a whole. So it's a big problem. And when we talk to retailers, they are telling us that this is a major concern for them. And, probably the thing that, we're all worried most about is, the organized retail crime element of it. Those things that, we hear called smash and grab, because there are, organized retail criminals out there that are targeting retail. And, the violence associated with that is hugely problematic. But also, the amount of goods that they are stealing from retailers is having a dramatic impact.
Is there prevailing wisdom? What is the industry going to do collaboratively to stop it or to curb it?
Well, we need the government, local government, national government to work with us. And, luckily, we have seen some progress on that front. We've seen some bills introduced that we believe are going to be helpful, but it's going to take a concerted effort on behalf of law enforcement, on behalf of government, on behalf of the retail industry to all work together and make sure that this is an issue that we can get to the bottom of, and make sure that it's not low-hanging fruit for organized retail criminals to target the retail industry.
Target, Walmart, Walgreens, Home Depot, all calling out theft as a real threat to their business. Mark, let's talk about what's working and what's not working for retailers right now, because in 2022, certainly we saw many discount retailers outperform as some consumers decided to trade down in terms of where they were spending. Also, the private labels, which tend to be cheaper, were one of the outperformers in 2022. Do you see that trend continuing this year?
Yeah, so we know with inflation happening that consumers are making decisions with their wallet, and those decisions aren't just about trade-offs between essentials and non-essentials. There are also decisions about whether you're going on holiday, whether you're staycationing. There are lots of different decisions that consumers have to make when it comes to deciding how to spend their money. But one of the easier things to do is to maybe not buy that organic, grass-fed, expensive bottle of milk and trade down, like you said. So, we're certainly seeing that behavior. We're seeing consumers begin to be a little bit more frugal in terms of their choices.
One other trend I want to quickly touch on is social commerce ahead. How significant do you think that is in the next couple of years now that Amazon is getting in the game with its TikTok-like competitor?
Yeah, that's a great question. And the way I would position it is this: some of the things that we do today, like I can walk into a store, pick up something I bought online, look at a store plan, see exactly what I want to find, where it is, and how much of it is in stock. These are things that I wouldn't have thought of 10 or 15 years ago. So there's constantly innovation going on. There are constant developments in there. Social commerce is one, and we asked consumers about it recently. And leading into the holidays, we asked if they plan to use social commerce, and 25% of them said that they either had or did plan to use it going into the holidays. Now, what's interesting is actually the breakup of that. It was 31% men versus 19% women. We're actually expecting it to break the other way. So it's not just women who are out there using these social commerce platforms. It's men, and it's older men as well.
Interesting. Dave, I think you're one of those.
Oh, yeah.
Men, aren't you?
I'm a sucker for
Younger.
social commerce.
All right. Yeah. It makes a lot of sense. It makes it so much easier.